What's up, everybody? Markets chopping about. We got some absolutely incredible charts we got to look at right now. Is this the last shakeout before we have more upside? Is it just going to go sideways? What are you doing right now? Are you selling? Are you selling into this fear? Are you capitulating? Are you stacking into it? Are you just patiently educating yourself, checking in with all the different YouTube streams, making sure you have a good idea of what's going on with different perspectives? Let me know in the chat. We have some charts that we're going to be breaking down, going over what's going on in this market right now, because I think there's still a little bit of a hiccup in the sentiment about when markets are going to move. I'm going to talk about that date we have to pay attention to, as well as where these price levels are. We've been nailing these price levels here. So shout out to everybody that's here in the room. Hit that like button, hit that subscribe button, ding the bell. We are about to get into it, breaking down these charts. Let's do it. What's up, everybody? Good morning, good afternoon, good night. We got to talk about what's going on in this market. We got to talk about exactly why the market is just being so frustrating right now and what is going on here. So let's go ahead and first stop right here on the total market cap, TOTAL3 actually. This is all the altcoins. Remember, we're watching this as alt season starting line. I think we can actually delete this moniker here and still watch this level. But what we really want to pay attention to is what's going on with this price as it does move to the downside. I want you to notice something. Let me go ahead and delete this Fibonacci. I want you to notice something here. If we take a fib from this level right here and drag it up to that top, I want you to notice something right in this zone. Price action from this breakout is coming right into this golden pocket right here. It's as if the market was doing exactly what it's meant to do all along, which is moving up, creating a new high, and then coming down, testing that bullish resolve into that golden pocket. So the question is, what are we really worried about? When we look at the Bitcoin monthly chart, this is a 3-day chart actually, and I broke this down the other day, but looking right here at the Bollinger Bands on the 3-day, I've marked out the last, was this 1, 2, 3, 4, 5, 6 different times that we had a squeeze here, a pretty tight squeeze on the Bollinger Bands, meaning you get the squeeze after price is consolidated, because this is indicating that the volatility has diminished. When you have a reduction in the volatility, aka the consolidation, you see as this price action stay within the same range. After this is a 20-day moving average. Based on the last 20 days, as that volatility averages tighter and tighter and smaller, then it starts to result in this squeeze on the volatility. What happens after the squeeze on the volatility could be a move up or a move down, but it tends to be a pretty large move because you're getting a constriction in volatility. So then you get that oscillation. Like everything in these markets is cyclical. And so we can see pinch here, move up, pinch here, move up. We had a little bit of a pinch here that just kind of consolidated the downside, but also move up. Now, again, here's where we got that different direction, because a pinch in volatility does not signal direction. As we see this pinching in, this actually broke down. This was that area where we broke below the short-term holder cost basis, a little bit of that deviation that we saw. But then we get another pinch right after this consolidation here. After this move results in consolidation, we see this goes wide because of this move. But then as this consolidates sideways, we see the volatility constricts down on these Bollinger Bands, and we get that next move up. Comes all the way across, consolidates a little bit sideways. This was the ETF launch, the US spot ETF launch, and then small move down right around this 20 moving average. We get the pinch here, and then explosion of volatility again to the upside. We are right now in the middle of the same thing. Are we going to get a further move down? Are we going to get a move sideways in here and actually start moving to the upside? We're going to have to see. We're going to be patient and let the markets tell us what they're going to do, because a lot of bets are riding on what's going on. So let's talk a little bit about what is going on, what is influencing the markets being a little uncertain right now, and see if there's any data that can help us identify what may be coming next. Now, I do want to shout out Arculus, our sponsor. Make sure that you have a healthy and smart way that you are protecting your crypto, your capital that you have in these markets with some self-custody. Head over to getarculus.com and you can use LAB10 for 10% off. It's my favorite form of cold wallet, hardware wallet. And I'll talk a little bit more about that in a little bit. But my name is Kelly Kellum. Welcome to the show. And if you haven't yet, hit that like button, hit that subscribe button, ding the bell. Look below the video right now if it does not say subscribed. And also if you do not have your notifications turned on, turn on those notifications. I'd love that. I'd appreciate it. Now let's go ahead and talk about what we got to talk about today. We got a couple of news stories we're going to go through very quickly. And then I got a bunch of charts that we're going to be talking about with what's going on in this market. So stay tuned because we're going to be getting through it all today in this stream. So what are we talking about today? Well, first things first, Binance CEO CZ sentencing puts crypto regulation under spotlight. So CZ is being sentenced today, which will likely be, it could be around a 3-year sentence for what, basically what he did plead guilty to. Former Binance CEO CZ sentencing hearing will take place on Tuesday, which is today, giving both the U.S. Department of Justice and his defense attorneys a chance to argue over how much prison time he should serve. Now, the reason it's at 3 years is because if it's anything beyond that 3 years, I think it puts it into a situation that the lawyers can appeal the decision. So there's going to be it's going to be interesting today to see if his sentencing does affect the market further or not, because he is such a pivotal person within the crypto ecosystem. But let's just keep our eyes on that. Then we also have first day of Hong Kong's ETF disappoints as bloodbath continues. Well, let's go back to the chart and remember, everybody's looking for that savior of the markets for it to just start pumping higher. Well, when we look right here, this marker, boom, option V, put a line. This is the approval. This is the 10th of January, the approval of the US spot ETFs. We got that downward price action. It's as if hope buoys the market higher. And then once that thing is released into the market, released into the wild, buy the rumor, sell the news. This is what happened here. Are we seeing something similar right here? Because this is a date that Hong Kong ETF got launched, and we're seeing, yes, some selling pressure. I don't think that the drop is specifically because of that. There's larger things at play here, and I have some great charts I'm going to show you and some numbers that I think will actually soften the blow of this sort of lack of hope that's come from this. Now, when we look at this, also, we have all these things going on. Consensus layer, come on. Consensus alleges SEC covertly targeted Ethereum. So there's still these ongoing legal battles with the SEC putting pressure. It's almost like throwing a wet blanket on any of the hope in the market, because while the markets look like they're primed and ready to go up, which I still think they are, there's a lot of questions about where this regulatory scrutiny is going to come in. Is it a FUD campaign? Let me know in the comments right now. Let me know in the comments down below. Do you think that the SEC and the U.S. government, Department of Justice, is truly taking the actions and steps that they are because they truly have the belief and the worries that they do around potential securities implications and different woes that they try to profess on a daily basis? Or do you think it's actually more about suppression of the market because it's a better option than the current system that keeps them in power and their controls on power through their manipulation of the monetary scheme? Let me know what you think in the comments right now, but we just need to pay attention to these. We don't need to get into the stories here, but these are kind of things that are shaking some confidence in the market. So we need to pay attention to this. We also see MicroStrategy in the face of all this bought another 122 Bitcoin, which was about, I think it was like $7 million $7.8 million worth of Bitcoin. And this is just incredible because they are doing what they said, which is buying regardless of the price level. They're just trying to stack in. This is the true nature of what DCAing is, which is dollar cost averaging, not being so tied into what's the pattern on the chart. They just have a long-term vision. So it doesn't matter, for instance, in 5 years, if they bought at 65,000 or 58,000 or 71,000, because all those prices are going to average out and see exponentially huge gains over time. The firm has been consistently bullish on Bitcoin, accumulating 25,250 Bitcoins in the last quarter of 2023 at an average price of $65,000. So you can see this is just phenomenal that they are still buying in the face where some of us retail players are scared. Well, why are we scared? Because we're looking at the 15-minute chart. We're looking at the 4-hour chart, even looking at the daily chart. Looking at the daily chart is not having a macro look, even if you zoom out. Having a macro look is looking at the 2-week chart or the monthly chart or above and really focusing on the general trend over time. And that would save a lot of us a lot of heartache. Now, last thing we're going to look at in terms of the stories here is gap between Grayscale, BlackRock, Bitcoin ETFs narrows to 1.5 billion. As a battle to be the top Bitcoin ETF provider in the US rages on, the gap between the top has shrunk. Because remember, Grayscale used to have like I can't remember the total, but it was like 680 or 650,000 Bitcoin. And there's been a huge rotation. Now think about this. A huge rotation of capital has come out of Grayscale, meaning people have moved their assets once it rotated from being a trust to an ETF. There's been a huge capital rotation of people moving out of Grayscale, which has left a multi-100,000 Bitcoin sell pressure on the market, and that has moved up the price over time. Or actually, I should say the price has moved up in the face of this from the launch right here of these ETFs. All sell-off in the face of all of this time. There's been about I can't remember the exact total. We can actually look right here. I believe my computer is not moving. Come on. I think my computer locked up. There we go. All right. So we can see Grayscale has had a huge outflow over time. Let's see, total. Let me see, total. All right. Total outflow eclipses, this is April 2nd, $15 billion in sell pressure. This is as of the beginning of this month. $15 billion in sell pressure has been put on the market since the ETF launch. And in the face of that, we see price action has moved up. This is phenomenal. Regardless of what's happening right here, consider the fact that there's enough interest in the global markets, especially in the US spot ETF market, but globally, there's enough interest has sent price higher in the face of a $15 billion sell pressure on the market. Yes, some of that sell pressure was just immediately reabsorbed into other ETFs. So it was just going from one financial product to another, but still that Bitcoin had to be sold in kind if it was moved out of Grayscale, meaning that even in the face of it being sold, it was immediately picked back up. So shout out to all the bulls out there and people that are not being shaken out by what we're seeing right here on this market. So let's go ahead and go through some of these things we want to talk about. Should we be worried? Look at this chart. Should we be worried right now? Until we break the line that we have here, this is from Kevin Svensson. You can find him at Kevin Svensson _. But we can see this is a typical parabolic curve pattern where we have base 1, base 2, base 3, base 4. And we can see the base 1 touch over here. The base 2 touch. We see it right in here. It looks very similar. Base 3. After price doubles. Price doubled. All the way down here. All the way up here. And then we see base 4, which is right here until we get that next leg up. So in the case of this, and I'm not saying this is absolutely what's happening, but we have to look at different shapes, different patterns, different analysis, and basically synthesize. Each one of you has to do this as well. Seeing various different types of analytical viewpoints on what's happening in the market, and then drawing together what makes most sense to what you think is going on. In this case, on this has not yet been invalidated. In fact, we're basically just doing the work of this formation of what it should be doing before it can move higher. So let's pay attention to that. And another chart from Kevin Svensson right here, we can see Bitcoin's current setup is not much different than the previous consolidation, which points to the potential for continuation. Let me say that again, which points to the potential for continuation. Similarly, we can come over here. Let me come to Matthew Hyland. Matthew Hyland made a great point on his charts yesterday, and that is right here. Okay, consolidation in an uptrend favors continuation. Remember that. Consolidation in an uptrend favors continuation. Why is this? Because the trend is your friend until it ends. Now, when we see this, what we're talking about, and I've talked about this quite often here, is that bull trend is rise, retrace, continuation, retrace, continuation. Sometimes you don't get a retrace. Sometimes you get a consolidation, continuation. This is going to be the favored direction of the market until we actually come over and break and form a new low, followed by a new lower high, and that continuation to the downside. This is also how you form things like head and shoulders. or you form things like double tops or triple tops. Now you have to be aware of that. And this is why it's always a numbers game. It's a statistics game. It's a data game, not a price game. We don't care about the price. We care about what is going on in the underlying data. So looking at what's going on right now and understanding, let's go actually over to the monthly. Let's go over to the monthly and just take a little, a general view on what's happening on this market as it stands right now. We've broken up through on the monthly. We've broken up through the Bollinger Band. And now we're actually sitting roughly at the top of this Bollinger Band. Now, based on this metric, you could feasibly come all the way down to this 20 moving average, which is down here at $33,000. I don't think that's in the cards. Because where we're at in the market cycle and understanding what's going on and understanding that we've had 1, 2, 3, 4, 5, 6, 7 green months in a row stands to reason that we need, yes, even on a monthly chart, rise, retrace, continuation. Now, the question is this right here. How much confidence do you have? How much persistence and conviction do you have that this does not shake you out? If it does, if you are playing some shorter time frame moves, aka wanting to short this and then buy back right here, that's fine, but you need to make sure that you have a system in place so the short here doesn't end up in you buying again above where you actually shorted it. Does that make sense? We have to be basically on a pivot right now. We have to be very adaptable because of what's going on in this market. Now, as we stand and see this, we've only come down. Look at this. We lost a 20 moving average, kind of came back up. We lost a 20 moving average. That's this line right here. This is on the daily. And when we came up, we rejected right at it, right at the peak of this rising wedge as well. So we came up to a known moving average that we are below, that's coming into the peak of the apex of this rising wedge, which is also a potential bearish pattern that tends to break bearish. So coming into a moving average at the peak of a bearish pattern suggests this likely will test a bit lower again. So what does this look like then on the other charts that we've had drawn? And now this looks very messy, but let's go ahead and zoom in here. There we go. These are the levels that we've been watching, and I've been sharing with you all on a regular basis here, and it has been hitting these all the way since when we were looking at the price action back over in here. We talked about this level. We talked about coming up and retesting this level at some point. We did. We came down. We lost this trend line here. And then we started drawing out the levels down below. We've tapped every one of them. The market is doing its best to shake you out if you don't have conviction. Now, when we look at this, let's go out to the 8-hour. Let's zoom out and look at what's happening here. Turn off everything that we have marked out. Let's turn off the Bollinger Bands as well. Just a bit of a consolidation. Now, what does this look like to you? What this looks like to me is when we had this price action kind of right in here. Now, this was trending up and then came down. We had the M formation. But when we come back over here, remember all these consolidations we had? Move up, consolidation, breakdown, consolidation, and then back up. Similarly, move up, consolidation, work your way up, chop you back down, work you back up, chop you back down until it comes down to a spring and then moves back up. The point here is, even in the face of this, when you zoomed out, you can see that this was just building a stairway to heaven. Rise, retrace, continuation, retrace, continuation that was weak. And because this was weak, we got that, retesting of this level, also that deviation below the short-term holder cost basis, and then launch up, up, up and away. So as it stands right now, I'm not saying that the market cycle top is in. The price action is telling me right now that there is a chance for lower price action. We've marked out all those levels on here, and we have been marking them out. Zooming in here, we can see we're coming down now to this level that we've had marked out since back here. This is at $60,000 level. I still think there's a strong chance that we come down and sweep into the short-term holder cost basis level, 59,513. What the hell is Kelly talking about? Well, let's come over here to this chart right here. This is that level I'm talking about, that short-term holder cost basis. That is a metric that tends to identify if you are on a strong bullish regime or you're weakening into a bearish continuation pattern. Now, this is that deviation I'm talking about here, where it did get a little scary, where price did go below it. But this here resulted in a great buying opportunity. You see this is even shaded pink a little bit. This resulted in a great buying opportunity. Now, Do you buy just because you're below the short-term holder cost basis? No, because in this case, bull market top, we came down and lost the short-term holder cost basis, and it marked a great selling opportunity or a short opportunity each time we came up and tested it until we broke back through it and got the confirmation coming down. And remember this chart that I shared with you all yesterday, and I've shared it many months ago as well. But everybody thinks that retest to the downside was specifically, let's go over to the 3-day chart. Everybody thinks that retest to the downside was a retest of this trend line. And it was, but look at it on this level as well. It was a retest of the short-term holder cost basis, defining that we are now actually in a bull trend on multiple levels. We broke through the short-term holder cost basis, meaning the average price of all short-term held coins is below where the price is. And when price moves up and you have this spread, this positive spread, when the price comes back, do bulls defend this area? Do bulls defend this area? Do bulls got a little scared, but they defended the area? We moved out of this. But this defined the switch in trend of breaking through this and testing it. This is why it's so important as I'm looking at this, and we're looking at, yes, technical levels, price action levels, all the different things that we can see on the chart on traditional analytical settings when we're looking at this. But in addition to all of this, we want to look at where is price in relationship to the average price that all the short-term holders got their coins at, right? That's what the short-term holder cost basis is. This means there's a positive spread for those short-term holders. If we do lose this, it's not the end of the world, but we're going to have to watch. And we talked about this with this level just below. That's why I've had this marked out on this chart for quite some time here. And that is, let me move this up. That is down here at this 59.5. This would be a sweep below this support level that we've had. And if we come down in here and lose this level, it's not the end of the world, because remember how much bullishness is riding on the potential of where this market is going in the near future. It stands to reason that Wall Street may try to break some things that we haven't seen in previous cycles. We may see a little bit of increased volatility. We may see another deviation below the short-term holder cost basis. So let's not let that absolutely change our minds about what's going on. But we just need to look to that next level down. If we do come down and sweep below 59.5, I'm looking for a test, one at the 57 level, and then ultimately coming down to this $53,000 level. Shout out to everybody that's in the house right now. We got 100 people in the room. I hope every one of you has hit that like button, subscribed, and dung the bell. I see we got a lot of BitLab members in here too, with all these, what do you call it? The beakers next to your name filling up. So shout out to everybody here. If you are in here and you're a BitLab member, drop an emoji, drop a Mr. Muchacho. Are you buying a dip? Are you buying the dip? Put in that buy the dip shopping cart emoji in there. What's up there, Rodriguez and Sawtooth Hiker, EB Wells. We got a lot more that we got to go through. B Team Crypto also in the house. Big love. Ethan Smith, one of my favorites in the BitLab Discord, always dropping knowledge in there. By the way, if you are a BitLab member in the premium Discord and all this, John Dalton is in here actively right now today. Just you go in there in the chart request section and do your request, and he's in here charting different levels, setups, and maybe we'll go through some of these in a little bit, highlight some of John Dalton, he's one of the people here on the BitLab staff, professional trader and absolute OG analyst, always charting in here for everybody in the BitLab community. So let's continue on with what we want to talk about. So this is what we're talking about, price, which points to the potential for continuation. So this is what he's talking about. This is the ETF coming to fruition. This is a sell-off. And then what we see with the RSI, we see the RSI consolidating lower, giving us more room to run when it does break out. So we don't want to just look at where the price action chart is. Let's look at what's going on with the RSI. And we see the RSI has been moving down, very similar to what we saw back here. This is going into the end of the last year, into the ETF launch right here, the subsequent sell the rumor news, and then the launch upward. Well, what did we see? We saw the RSI break down, come back into this, have a little hesitation, and then break through. So what are we seeing here? We have this descending trend line on the RSI, and we're kind of getting a little bit deeper pullback right now, but we're going to want to watch when the RSI gets back up to this descending trend line. Do we get that breakout? which can be a leading indicator that this is also likely coming to break through. Now, we have all these ETFs we talked about. Not only do we have these spot ETFs here in the US, we're going to get into the Hong Kong stuff here in a second, but Morgan Stanley, it's not just the ETFs are launched. We're going to see a cascading effect of other financial institutions here in the US give more and more approval and more acceptance and more of a PR push and availability of this Bitcoin financial product to their customers. Some of those customers are not even going to know that they own Bitcoin for some months afterwards because they're just buying into a fund that fund has an allocation or some percentage allocation to Bitcoin. So in this case, we see Morgan Stanley has filed with the SEC to get Bitcoin exposure for 12 of its funds. Morgan Stanley has $8 trillion in client assets and is the %1 investment advisor in the world. So this is huge that they're adding Bitcoin exposure, and it's not going to be 100%. It'll be 8%, 3%, 1%, 0.5%. But the point is that exposure is going to intrinsically be held by a lot of those investment clients that they have. And some of them are not even going to realize that they're getting exposure to Bitcoin. This is excellent. But now we see everybody thinks that the ETF launch yesterday in Hong Kong was a failure. But Eric Baltuna says right here, we tried to warn everyone to lower expectations re-Hong Kong, especially versus the 25 billion hopium of the estimates. That said, if you localize the numbers, this was big. E.g., China AMC Bitcoin ETF took in 123 million on day one, which already ranks at 6 of the 82 ETFs launched in the past 3 years in Hong Kong and top 20% overall. So we are seeing things a little bit better than, it's not as good as, you know, the huge hopium expectation, but this was actually remarkable in the scheme of things. Now we look at this chart right here, just in Hong Kong's Bitcoin ETF, China AMC took in 121 million in assets day one of trading, more than all US Bitcoin ETFs combined in the past 6 trading days. This is what I'm talking about. The past 6 trading days, we can see right here. It's really over the last week. This is from Bitcoin Strategy Platform's ETF tracker. But actually look at this. We're seeing downward price action right now, but consider the fact that we've actually seen a reduction. We've actually seen a reduction in the amount of sell pressure from the ETFs, even though we're getting downward price action. You see, we had minus 1,800 last Wednesday. We had minus 2,800 last Thursday. We had minus 1,970 on Friday. On yesterday, we only had minus 816. So it's not just a story of the ETFs in the market. It also has to do with the position that we are in the market and the fact that we did rally as high as we did leading up to the halving. Now the halving occurs and everybody's like, the halving's occurred, it should just be breaking away. Well, there's got to be a little bit of an effect of letting the supply crunch actually take place. And remember, a move from 6.25 to 3.125 Bitcoin per mining block is getting less and less of an impact on the supply dynamics of the market. Now, as the markets have moved up and we have new players in the space, especially the Wall Street players, traditional asset players that are buying into the ETFs, we're seeing a slightly different dynamic of what's happening in the chart. So let's not get ahead of ourselves and realize also that because price action isn't going up only doesn't mean the rally is over. Let me say that again. Because the price action isn't going up only doesn't mean the rally is over. We've seen historical trends, the market cycles within Bitcoin, the market cycles of the halving cycle within Bitcoin, the market cycle tied to the global liquidity cycle within Bitcoin, all suggest that we are doing a necessary cleansing of the trend right now where you have rise, retrace, continuation. We are in that quintessential pinnacle point right now that most people get wrecked in the market because they don't have faith in the long-term horizon of what's coming on in Bitcoin and in the crypto market. When you have a large rise, you need to have a little bit of a reset with the retrace. So the question right now is, are you capitulating because we're getting some percentage points down that are so far less than we've seen in any previous cycle? No, right now it's time to look for dip buying opportunities if your strategy is to make money in this market over time and having the conviction to hold. This is not financial advice. This is strategy advice for what I've seen that does work. The trend is your friend to the end, and a retrace does not mean it is the end of the trend. That's what I got to say about where we're at right now in this market cycle. And you know what? It does feel scary, and nothing that is great that can have a huge impact on your life is easy. So ride with conviction right now, because even if we get a further move down to that $53,000 level or below, that just screams a better buying opportunity. Now we can see short-term holders are moving at a loss. Investors who have been costing investors who have been costing higher over the last 6 months are at a loss and are likely panic selling below the SOPR. This is a spent output profit ratio. So when you're spending, are you spending at a loss? Are you spending at a gain? That's what the profit ratio is. Are you spending at a loss or a gain? Indicating that the market is close to a local bottom. So this is great. We can see this on this chart. When this kind of comes up in here, pushes up and taps back down, we get the launch. It's up, pushes down. This is right when everybody's starting to sell at a loss. Who are they selling at a loss to? Remember, if you are selling at a loss, somebody's buying in that has more conviction that's going to get a huge amount of gains because they have a better time horizon of what they're doing. Do not sell to the big players only to be mad that how come they always have all the money, because they have a different strategy. When we look at what's going on in the market, we also have to contend that there are some things at play that are a little scary. As bullish as I am, we have to look at patterns on different types of charts. In this case, from TXMC, you can find them at TXMC Trades. We can see the NVRV, the market value to realized value. Remember, we talked about short-term holder cost basis. The RV, realized value, is the average of every coin in circulation the last time it changed hands. So what we can see here is this is a spread. This is a Z, the entity is adjusted, which means they just narrow down some of the wallets or groupings of wallets that they know are from the same entity, but that you can ignore that. What we're looking at here is a spread. When this goes very high, this orange line, this means that the market value, what you're seeing traded on exchange, has a huge separation from that average cost of every Bitcoin the last time it moved. So when you get this huge spread with this getting very high, that means the market is getting overvalued in some respects, right? So when you get these peaks, look at this market cycle top, huge peak, market cycle top. This is all of a sudden these peaks. Now we got a trend going here. We got a lower peak here. And remember, a lot of people look at this market cycle back here in 2021, 2022 as somewhat suppressed because of all the shenanigans going on with Chinese mining ban and etc. But regardless, the data does show that we do have a descending trend line on the NVRV. And what do you know? We came up here, we broke trends having the all-time high happening before the halving, but this also resulted in the NVRV Z-score here getting rejected right at this trend line. So it's going to be interesting to see. And I do think that this cycle is more likely than not going to break some of the historical trends. In this case, from this cycle top to this cycle top was about a 3.5x, about 19,000 up to 68.7 or 69,103. I can't remember, but about $69,000. It's about a 3.5x from the previous cycle top. It stands to reason based on historical trends that this X was, this was a much larger X. I can't even remember what it was, but it went from about 400. I can't even remember. But yeah, let's actually look on the chart. I look at so many charts, I just get a little discombobulated sometimes. All right, so here we are. From this top right here up to this one, that is a 16X. Okay, 16X. Right? And then here we have about a 3X, a little under a 3X. So as a reduction, the volatility, I forget what the term is at the moment, diminished returns as the market cycle gets bigger, it's harder to gain larger gains. But because we're on the cusp right now of having so many new capital flows into the space, and we're still relatively low in terms of the percentage of people the world over that are participating in this market, I do think we do have the possibility this cycle to not just, get even smaller X from this, 70,000, a 2X from that would be 140,000. I think that's very well, it's a decent thesis to hold. But as I was saying to some of the people here at the Discover Crypto offices this morning, I think it's likely that we kind of get one or two scenarios. We get something that is somewhat underwhelming, that's right on par, which is, somewhere between the $115,000 to $140,000 range, or we get something that is like really shocks people, that goes, the 275 up into 350, somewhere up in there, where we're outpacing the size of gains from the previous all-time high. And that's all going to depend on what happens with these capital flows, with if there's new sort of black swans that come into the picture, if there's new suppressions on the market, like we saw with the Chinese mining ban. We already saw all that information about Russia and what's going on with them limiting the scope of new developments within crypto and exchanges and all this. It's not a mining ban, but I listened to an excellent, by the way, I recommend this to everybody. Let me see if I can find it. Dylan, you need to follow Dylan LeClaire. If you're not, I'm going to try and get him on the podcast. But it is this. Where is it? That's not it. I listened this right here. I listened to this ICYMI, in case you missed it, episode 6, the fight for sovereignty and privacy. This is a great, it's about 40 minutes. I listened to it last night while I was laying in bed going to sleep. Great exposition on, what's going on with Bitcoin and Ethereum and these wallet situations and why it's bigger than just should these wallets be allowed or not. He breaks down why there looks like there's a little bit of a sculpted plan and strategy that governments the world over, and specifically the US, are coming after narrowing it down to potentially you not being able to hold crypto, maybe only being able to hold crypto financial products like the ETF, giving them those monetary controls because it's through those already legacy regulatory systems. So it's important thoughts that he has here, and really, really smart guy. If you're not following him, definitely give him a follow. But continuing on what we're talking about here, we talked about the NVRV. Once we break through this, I do think if we do break through this, I think that would be the signal that we're getting a different type of market cycle that will outpace the gains that we saw in this one, from this high to this high, meaning that if we do break through this, I do think we are going to go beyond a 3X from this $69,000 top. Now, looking at this chart right here, transfer volume ratio, we can see, look at this peak right here. This is at 3,100 up to almost 14,000. Transfer volume ratio got really high. We had the large sell-off. Then we got another peak here. This was somewhat front-running the top here. And this also had to do with wallets over 10,000 Bitcoin and wallets over 1,000 Bitcoin. The big players, people holding a huge amount of crypto, selling into the strength of this bull trend. And then we get a market cycle weakness here that also sells off. So one could argue, was this sell-off a result of the Chinese mining ban, or was it a result of the larger players divesting out and leaving the market weak with only short-term held hype cycle buyers here at these market cycle tops? This is why I like to look at different types of data, not just, okay, what pattern is this, a head and shoulders, is this a triangle? While I use those, if you're not using on-chain data, or at least watching us here at BitLab Academy, tuning into this community, I try to keep you in the know of the deeper alpha that's signaling what's going on with various market participants so that we know how to swim with the whales. Now, this is a little concerning. As bullish as I am, I don't know what this hand motion was. As bullish as I am, right? No, but looking right here, this transfer volume ratio, this is a pretty big spike, larger than we saw here. And this could signal that maybe there is indication that there could be a bigger swing low than we want, right? We want, looking at this, we want this. Let's go down to the 6 hour. We want this to be a bull flag, or maybe at this point, a little bit of a falling wedge. We want this to be a bullish structure. But when we look at this chart and we see that, man, there's a huge amount of transfer volume here right at this break of previous all-time high, does it signal that we need a little bit of cooling off in the market? The reason I bring this up is not to be a bull. is not to be a bear. It's to have data that can set us up psychologically, because this is what ruins us in the market. Let me say this again. Whether the market's going up, whether the market's going down, you want to know where it's going. But the truth is, this right here is what ruins most people in the market, because we don't look at a wider set of data outside of just the price action, outside of just the patterns on the chart. What's RSI doing? Look a little bit deeper. Look into on-chain. Watch us here at BitLab Academy. Get a deeper scope of alpha so you are prepared for any eventuality in this market, because truthfully, the majority of people in this market lose money because right here, they don't have the data to give them the right kind of conviction to hold for the right amount, the right periods of time. They move on emotion. They get triggered into selling when smart money is buying. And then they want to ask, how come those guys, how come that 1% always has so much more than us? They're acting differently in the market. And on-chain data gives you an idea of what every player in the market is doing so that you can stay ahead of these trends and not get caught up in the emotions of them. That's what this is all about. I don't want you just to be in here buying and selling. Let's have a plan. Let's have an agenda so we can absolutely dominate this market like the bigger players do. And this is suggesting there was a lot of movement here. Maybe there's a little period of some cooling off. We can also see similar chart. This actually exemplifies it a little better. This is a value days destroyed. This suggests how long each coin has been held if it's sold. If a coin has been held for 10,000 days, when that coin moves, you're deleting, you're removing all those days held. Now it's a new coin again, right? Or the value days is reset to zero. So when you move a long-term held coin, it spikes this. And when a lot of long-term held coins move or take profit, as you can see right here, this drives this multiple up, showing that the strength of long-term holders is starting to leave the market, leading into some weakness. We see this also right here. A lot of people selling into these levels because people could not believe it would go all the way up to 20,000, leaving, only hype cycle buyers left until we get this last little onslaught right here and the market moves down. But look at how high this value days destroyed multiple is right here, right at this previous all-time high. We may need a little cooling. Everybody says sell in May and walk away. Now, as Joshua Jake pointed out on the Discover Crypto show this morning, some people would argue that, well, the time frame is different because this market cycle breaking all-time high happened pre-halving, which is several many months before ahead of schedule. What if there is no schedule that is outlining, that is, what if the schedule that we're laying things up on is irrelevant now? Tech Dev suggests it's the global liquidity cycle, not the halving cycle. On that note, we're 100% where we should be on the market. If we look at this chart right here, we still have capital flow coming in. Okay, so even though we saw some bearishness, we still have capital coming in. We're still above the short-term holder cost basis. And furthermore, looking at this is this bull markets aligned by the realized prices all being about the same level, right? So then you can see it on scale where we're at within the trend. Now, this pink line right here, this is the cycle that we're in right now. And look, we're still, you would argue, if you organize this by the realized price, we've never been above where we should have been. We've been right on pace for where we should have been the whole time. This is the actual tradable price. And you see, we're actually getting now to a point where we may be having a deviation below where we've been in all previous cycles. So it always depends on the data that you're looking at and why it's so important to have various types of data. Now, I do think things are leaning bullish. But I also do think things got a little hyped. The price got a little hyped up. I'll say this for tomorrow. This is some dollar stuff. But by the way, make sure you're giving me a follow here at Kelly Kellam. Make sure you give, that's KELOY, KELLAM. Make sure you're also following BitLab Academy here at Academy BitLab. And remember, on the BitLab Academy page, we have a giveaway happening tomorrow. If you come to the BitLab Academy page, this tweet right here, this pinned tweet, come here, hit that retweet button, hit that like button. I will be drawing tomorrow. It's a $100 giveaway. All you got to do is retweet this. And by the way, speaking of that, if you haven't joined BitLab Academy yet, we have a halving special going on right now. If you head over to lab.bitlabacademy.com/Kelly, and Kelly is spelled Kelly, not Ley, not Li, not Lie, Kelly. head over to BitLab, lab.bitlabacademy.com/Kelly. Where is that page? Right here. And hit this button right here. Join us. You get 15 days free, and then you get to lock in the family pricing of just 25 bucks a month. We're dropping signals. We're dropping charts. We're doing member streams. I'm breaking down alpha, exactly what's going on, what I'm seeing in the market, liquidations levels, setups, all this. I hope to see you guys in there. And by the way, when you do sign up, you also, right after you sign up here on the second page, there's an upgrade option. You can upgrade, get the indicators we're using, get the access to all the crypto courses that, you know, where I break down everything going on in this market, how to read candles, how to read patterns, on-chain analysis. There's 20 different lessons in here, indicators, trading strategies, all this on that upgrade. By the way, when you do sign up, make sure, I'm asking you politely, check your email, check your inbox, and that means check your spam folder, your junk folder, because sometimes people get mad that their account's not getting activated. It's the only way your account gets activated is by you following a very simple two-step process that is outlined in that email. Again, if you have any issues, you can always email me at help@bitlabacademy.com. Now, we're going to get over to this in a second. Now, let's look at these liquidation levels. We came all the way up in here and zoomed all the way back down here, clearing out this liquidity here, clearing out this liquidity here, clearing out, and it's starting to look like we're kind of freeing up this lower side. And look how hot this is up here. Think of the price action like a moth. Think of it like a moth. Where's the bright light? That's the direction that the price, it's like a moth. The price tends to go towards that bright light. Where's the bright light? Way above us up here at $65,000. Now, when we look at this on the liquidation map, we can also see we have this windshield wiper effect where this comes down and then moves up, and this has got quite low. We've got a pretty big delta here where this has come all the way. Come on, get my mouse on there. Down in the minus 10 billion, the liquidity. Starting to get in that situation where so many people are getting committed short that we're getting all these short liquidations that are above us. And you see how bright this gets up here? This is very similar to what we're seeing here with all this up here. But this is suggesting we may be setting up an opportunity for a short squeeze where we start slicing through levels and getting very quick movement to the upside. Now let's get down into Bitcoin, zoom in here, and notice that we are right now flirting with disaster if you're not prepared. We have all this red here on the 6 hour. Red VWAP, red stochastics. RSI is a bit neutral because it's just sitting right in the zone, actually looking like it's trying to set up for a little bit of a rebound. Stochastics, you know, the money flow and the momentum waves. But we're still getting, look at this. We're getting, again, high selling pressure right in here. I could tell because these are white and then this turns red. Let's go ahead. This is probably going to turn purple here in a second. Oh, no, it's actually surprising. Didn't turn purple yet. But we are basically tapping in these lows. Let's pay attention to what happens here in the next few hours. If this does have another move to the downside, it just becomes a better and better buying opportunity the further down this goes. But there's no way to know if this is going to rebound here, if it's going to rebound here, or if it's going to rebound here. This is why, if you do have dry powder on the sideline, split up some of your entry and ladder in. Here's a great spot to ladder in where we're currently at right now, leaving a little bit more below you and a little bit more of a much better buy down here. And then you get the average entry of all three of these, because there's no telling how deep it's going to go or if it's going to rebound right where it's at. We can see now that this is on the 2 hour. See how purple these all are? Purple means that there's high selling volume. We can also see this in all this red here on the BitLab trim fuel down here, but negative money flow. In fact, it's starting to increase to the downside. Or decrease, you know, more money is coming out. But we also see the RSI is starting to get down into somewhat of a bottoming posture, and the stochastics have come very, very low as well. So to me, this is looking like somewhere in this region, we may get a bit of a bounce. And remember, we talked about that $65,000 level? Well, the $65,000 level, we have several levels before those liquidation zones. That very hot liquidation zone we saw above us, which is up at the $65,000 level. We have to watch if we do get a bounce. The weekly VWAP is going to be our first major step. We have the $62,000 level here, but this zone between $62,000 and $62,400, watch for a potential rebound because this is also the lows, these previous lows. If this pushes up in here, there's likely going to be a little bit of trouble here. If this does get rejected and come back down, that's further signal we may be testing down here on that failed rebound. If we're able to push up above this, I would watch for a price action rejection. If we're able to push up here, a price action rejection temporarily here, and watch where the rebound comes down and test for the bulls to come in. In this case, if this weekly VWAP is something like this, coming down, finding support there, and then having that test up here into the 65, and then testing down. And then so on and so forth. A little trouble, boom, 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 something like this, right? So we have the levels on the chart to understand what will likely happen and where there could be a little bit of hiccups in price action. So we don't just get triggered emotionally by the price action struggling at levels that we've already outlined. Now, when we look at Ethereum, Ethereum came right down to that level I was talking about yesterday. God dang it. Ethereum came right down to that level, came right into this $2,900 level. We've been nailing it on the Ethereum analysis the last month. But this is the main level we got to get over right here. These two lines right in here. This macro trend line that goes all the way back like 2 years. And then also this, these lows and all this chop right in here, this pointing to this area right in here, $3,300. Once, and we're not anywhere near there, but as price does push up, we've got levels before that. We have to watch the weekly VWAP right here. It's going to be about 3,100 by the time this moves up, if this does not get a lot of volume and move down further. But we're watching this zone right in here. A move up to this does not mean we're fully bullish yet. It means we're having a fall, retrace, potential continuation. Excuse me. Until we can clear this low, which will be roughly about where this weekly VWAP is by then, which is that $3,100 level. If we can clear that, then I'd be watching for a rejection back up here at 3,300, come down to test, work, slice through, and we're seeing the components of what needs to happen in this market. Now, that's all I got for you today, guys. I love you. I appreciate you. I want to make sure as you're trading, we have so much coming in this market, and it's, don't get ahead of yourself by not taking profit. And also don't hold all your crypto on exchange. Make sure you head over, get the best security out there for your crypto. Get Arculus.com. You can use the code LAB10, LAB10, the numbers, at checkout to get 10% off. And again, this is my favorite crypto wallet. I mean, 3 different forms of multi-factor authentication. Doesn't matter if you lose the card because they still need the other 2 forms of multi-factor authentication for it to work. And you can always replace the card by just using your seed phrase and loading your new wallet onto the new card. So it's my favorite crypto security out there. So make sure you get involved with that. I love you guys. I appreciate you guys. I'll see you in the Discord. And remember, head over to lab.bitlabacademy.com/Kelly. Sign up with us. Join us in there. It's myself, Joshua, Jake, DZ post trades in there. We got Tim, TA Tim in there. John Dalton and Corduroy always sharing so much incredible charts and alpha in there. I've been pulled away a little bit the last 2 weeks getting that migration over that new payment provider. So if anybody has any questions or comments or issues or concerns, you can always email me, help@bitlabacademy.com. But sign up right here. Join us. Get in there. Get the courses on the upgrade on the next page. Get the indicators. I'll see you in there. It's the best way to support us here at the BitLab Academy. And also, if you don't want to do that, just join us on the member program here on the YouTube as well. The link is down below. Join. You can see it below the video. It'll just say join membership. Great way to help support the channel. I love you guys. Hit that like button. Hit that subscribe button. Ding the bell. I'll be seeing you in the Discord. Adios. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Adios, muchachos. Thank you for being here. Each and every one of you are my friends. Let's get it.